Good evening, we stand with Ukraine. Hello everyone. For those of you who are new to our channel, here we talk about big money, high profile deals, and where the market is headed. Today's story isn't just about money, but about a battle for the future, maybe even for the conquest of the universe. About how an already enormous company, sensing its own strength, begins to place its pieces on a giant chessboard, called Global Technologies, and the first two moves were truly impressive. If you look past the charts and numbers, it all started with something surreal. Just imagine, two fierce competitors battling for leadership for decades suddenly shake hands. That's exactly what happened when Nvidia, the undisputed leader in AI chip manufacturing not long ago, on September 18th, announced a $5 billion investment in its longtime rival, Intel Corporation. If we look at the basic figures and return to the numbers for a moment, Intel's market capitalization is 166 billion, while Nvidia's is 4,330 billion. That is $4.3 trillion. Over the past year, both have grown by about 45%, but Intel's historical maximum is a 70% increase. 5,801, given that the current price is $35.48 per share, while Nvidia's historical maximum is $184.55, and right now the stock is trading at $178.19. As you can see, these are different weight classes, and Intel is trading at almost half its historical maximum, whereas Nvidia is almost at its peak. Well, let's get back to our story. This is not just an investment in a competitor by Nvidia. This is a cold, calculated strategy. Intel, once almost a monopolist in the PC and server processor market, has been stumbling more than progressing in recent years. At the same time, it has been losing its leadership position in the technology race. Meanwhile, Nvidia, whose revenue has skyrocketed thanks to the mining boom and the surge in artificial intelligence, did not see this as a competitor's weakness, but as an opportunity for itself. An opportunity to create a powerful chip manufacturing center in the United States, reducing dependence on Asian suppliers. This was approved at the very top in the White House, which had just launched a program to support American semiconductors. Intel, in partnership with Nvidia, will develop and manufacture specialized processors for data centers, as well as for regular personal computers. Nvidia is investing $5 billion in Intel common stock at a price of $23.28 per share. So this is a very good price benchmark if you decide to invest in Intel along with Nvidia. But there is in fact one very small catch. Market players reacted instantly. Intel's shares soared as if they got a shot of adrenaline. You can see the chart on your screen, and the stock price is trading above $35, so it's unlikely you'll be able to invest under the same terms as Nvidia did. Let's try to do a brief technical analysis and then we'll return to our story. In front of us are the monthly candlesticks of Intel's stock chart. Let's take a look at what's happening here. First of all, note that the stock's price peaked in September 2020, in the year 2000. This was probably connected to the exponential growth of internet companies, which ended with the dot-com crisis in 2000. And after that, everything started to fall apart. In fact, it's likely for this very reason that demand for servers and computers also dropped. And not because Intel was bad, but simply because the entire tech sector was in decline. So the stock went down. Then there was a sideways trend, let's say a wide-ranging one. Well, starting from around this period from 2014, there was another rather rapid growth. Surely the situation with mining and artificial intelligence had an impact here, because in any case, these are all chips and processors, and Intel is one of the key suppliers. Any computer is not just about graphics processors, but also central processors. So after reaching the peak, there was a sharp decline. As I understand it, this was due to losing the marketing wars to AMD. For example, when I built my own computer, I also chose an AMD processor. Nevertheless, over the last 2 months, we've seen growth, and growth that broke through the 100, 200, and 50-month moving averages. Everything points to continued growth, but I can say for sure that now is not the time to buy anything. Why? Because you can buy, but first of all, the stock market as a whole is quite overheated right now. And secondly, just look at how huge this surge has been. As a rule, after such growth, there are compensatory pullbacks. This pullback could at least reach the base of this red candle around the $30 mark. So buying at $30 would probably be more interesting, and that's still more than 10 to 15% below the current price. Let's look at the weekly candles. What do we have here? On the weekly candles, we can see that almost all the moving averages have been broken through again, so above us there's only the 300-week moving average, while the 50-week, 100-week, and 200-week have all been surpassed. But note that the RSI is in a zone of quite significant overheating. On the weekly time frame, I wouldn't buy before about $32.50, something like that, to be honest. Well, if you don't overthink it, the situation here is long, but I want to emphasize that the US stock market is globally overheated and is looking downward, so I don't know how things will develop for Intel. However, the collaboration with Nvidia seems quite promising to me, and for the long term, you could buy some shares in the $30 to $32 range with a portion of your funds. But that was just the warm-up. While everyone was discussing the deal with Intel, Nvidia was preparing a second move that stunned everyone. Nvidia decided to invest $100 billion in OpenAI, the very company that created ChatGPT, and essentially set the direction for the development of artificial intelligence for the entire planet. Just think about it. The company that provides the brains for the entire world of artificial intelligence is now strategically aligning with the company that writes the most advanced firmware for those brains. And this is no longer just a partnership, but an attempt to create a unified ecosystem where Nvidia controls both the hardware and the software. Over the past couple of years, Nvidia has acquired more than a dozen small players, building a vertical power structure that any empire would envy. The strategic partnership allows OpenAI to build and deploy artificial intelligence data centers with a capacity of more than, just think about it, more than 10 gigawatts, using Nvidia systems made up of millions of graphics processors for next-generation AI infrastructure. That's what I call taking over the universe. Just imagine the power this artificial intelligence will have. The first gigawatt-scale Nvidia systems will be deployed in the second half of 2026 on the Nvidia Vera Rubin platform. And here it's worth at least briefly mentioning who Vera Rubin is. Everyone knows the recent story about how Vasya bought the ultra-powerful RTX 5090 graphics card from Nvidia and it turned out to be defective. But those are just details. In reality, the card is top-notch. The main thing is that this top-tier line of cards is built on Blackwell technology, where the solution is based on combining two chips. A new technology is on the way, Rubin Ultra. This is the next step in chip evolution, built on 4 chips. Mass production of Rubin Ultra is scheduled for 2027, but that's 2 years from now. And already on September 9th of this year, the Rubin CPX graphics processor was introduced, which is built on a single chip, making both production and management simpler overall. Well, it's much easier to manage one digger than two. Rubin is optimized for the compute-intensive phase of context processing, the so-called pre-fill phase. If we try to greatly simplify the work of all our AI assistants, it can be divided into 2 phases. The first is context analysis, and this is exactly the phase Rubin is for. And the second phase is the generation of the response. Based essentially on this context, on what you asked, and on the information gathered by the artificial intelligence, the standard Rubin graphics processor exists for the generation phase with faster memory. That is exactly the kind of memory needed there. It's quite difficult to compare the performance of systems designed for fundamentally different tasks, but I'll put it this way. The Rubin CPX has a computational power of 30 petaflops at low precision calculations. Sometimes it's high, sometimes it's low. So this can surpass my top-tier 5090 card by dozens or even hundreds of times. I want to emphasize it's very difficult to compare apples and oranges. They're designed for different tasks. But the Nvidia Vera Rubin will have a performance of 100 petaflops, which is 3.3 times more powerful than the Rubin CPX. So even the Rubin can easily handle software code bases of over 100,000 lines. And now assistants can not only generate individual fragments, but also analyze, optimize, and restructure large software projects as a whole. That is, you can just come in and say, I want you to create Microsoft Office for me. But all this time, we've only been talking about chips. Nvidia, however, is going much further. They have created a comprehensive solution for next-generation data centers called Nvidia Vera Rubin NVL144 CPX. And this device combines 144 Rubin CPX graphics processors, 144 Rubin graphics processors, and 36 Vera processors in a single rack. I'll tell you, the performance of such a rack is 8 exaflops. Well, so you don't have to do the math, that's equivalent to 1,000 times the performance of the new Rubin CPX graphics processor. The market and accelerators are experiencing extremely rapid growth. By 2028, its volume will exceed $500 billion. In this highly competitive environment, Nvidia holds an 80 to 90% share and continues to dominate. And here the story takes on an extremely important turn for investors, because where there is big money, there is always big attention, and sometimes even challenges. The question now hanging in the air is, has Nvidia gone too far? When a single company concentrates so much power over a key technology of the 21st century, it can't help but worry regulators. We've already seen antitrust cases against Microsoft and Google, but the case with Nvidia is unique. AI is not just a search engine or an operating system. This is a technology that permeates defense, medicine, and finance. Its unchecked concentration in a single set of hands is starting to raise questions not only about competition between companies, but also about ethics and ultimately national security. If Nvidia wants, it could take over the universe. But no one is allowed to do that. For now, as Nvidia's stock soars, investors are applauding. With every new deal, smart money is already starting to wonder, what if the next big news about Nvidia isn't a new acquisition but a notification from the US Department of Justice about the start of an antitrust investigation? The likelihood of this isn't very high yet, but the shadow is already being cast on the wall. Besides, competitors in the AI accelerator market aren't sleeping either. AMD is preparing Instinct MI400 by 2026 with a performance of 40 petaflops. Well, that reads almost like Rubin CPX, maybe even a bit more. Intel is developing the Gaudi line. The third generation Gaudi 3 is already available on the market. However, Nvidia is beating its competitors thanks to its comprehensive approach. While competitors focus on individual chips, Nvidia is creating entire ecosystems with integrated hardware and software. The Vera Rubin NVL144 CPX platform, God bless whoever came up with that name, is a vivid example of this. So what does this all mean for us, for those who view the market as an investment field? On the one hand, we see a brilliant strategy for strengthening Nvidia's leadership. They're not just selling chips, they're building the infrastructure of the future, and that promises enormous profits. At the same time, on the other hand, we see growing risks that the company's success could be limited not by market forces, but by political decisions. Two moves have been made, the game continues, and the way the next cards are played will determine not only Nvidia's fate, but the entire technological landscape. It's worth keeping a close eye on this match. This might be the most important chess game of our time. And to complete the picture, let's take a look at Nvidia's stock chart. Maybe there's something interesting there. Here we have the chart for Nvidia's stock. Notice the growth, and more growth. And it started, well, this kind of uninterrupted growth actually began in December 2012. Well, it's about the very same. Perhaps the initial growth for Intel actually started a little bit later, but this clearly shows the overall significant growth of the entire sector, specifically mining operations, advanced graphics cards, sophisticated artificial intelligence, powerful computing capabilities, and so on. And now Nvidia is undeniably the absolute leading innovator in AI processor systems. It is consistently growing and expanding, but please pay close attention to a very interesting and crucial point. Look closely, here's one prominent peak, and here are roughly the corresponding price peaks. Here's the second distinct peak. Actually, these are the important RSI peaks. Here's the third peak, and the RSI peaks are even a bit lower. This resembles a divergence, a double or even triple divergence on a monthly scale. And this divergence is very likely to play out downward. So yes, Nvidia is a great company, and yes, they're building data centers. But according to the chart, there are huge downside risks here. It's just an enormous risk. You shouldn't confuse, well, how should I put it, investing with the company's operations. It just so happens that in today's world, those are far from the same thing. A company can be successful, but if it doesn't show the profit growth rates that were expected, its stock goes down. But here, specifically here with Nvidia, I don't see any reason to buy. First of all, you're buying at the historical high. And secondly, look, once to the 50-month moving average, twice to the 50-month moving average. We could even drop to the 100-month moving average, somewhere around $40. $40, and right now it's $178. I wouldn't buy. In my opinion, the stock is extremely overheated. Let's see what's here. Let's remove all the drawings we've made. Notice this huge green candle. It was engulfed, then the red one was engulfed as well. And now, by formal indicators, the market is in a growth phase. But if we see the engulfing of this green candle from September 8th, it will mean that with high probability, this is a short that will develop further. Note, not to the 100-week moving average, but most likely to the 200-week moving average. That's $70 here. So right now it's at 180, but there's a chance it could drop to 70. But that might happen or it might not. I'm just saying that right now is far from the best time to buy Nvidia shares. The decision is always yours to make. I'm just warning you about the risk. And that's all for today. If you're interested in this kind of analysis, deep but without unnecessary fluff, and then subscribe to the Vasya BTC channel and give a like if you found it interesting. And thank you for watching until the end. See you next time on the air.